Now, I want to talk to you about the top 10 charitable contribution you think you can claim, but actually cannot. Don't go anywhere. Welcome, my folks, to another edition of the Awesome Studio QA Show. How are you today? I hope you're doing fantastic. I'm doing superb. If you are doing as superb as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to cover the top 10 charitable contributions you think you can claim, but actually can. I mean, we understand that the laws, the IRS guidelines are always dynamic. They change all the time. So knowing what you can and cannot claim as charitable contributions helps you maximize the potential tax savings that the charitable tax deduction offers, right? Now, the thing here is that not all nonprofit organizations qualify as beneficiaries for tax lowering gifts, nor do all gifts are eligible, especially when you give them to eligible charities. And so knowing what you can and cannot claim helps you do what? At the end of the day, it helps you maximize the potential tax savings that the charitable tax deduction offers. So we're going to go into the list right now. Number one, gifts to a non-qualified charity or nonprofit. So, we are very generous. Americans are very generous when it comes to philanthropic pursuits. We give nearly 2% to 3% of our personal income to charities and nonprofit organizations. However, there is a common misconception that basically all nonprofits are qualifying charitable organizations, but that is not always the case. So for tax purposes, the law classifies charities and nonprofits according to their mission and organizational structure. This is very important: mission and organizational structure. So each group must register with the IRS for the section of the law that applies to it. So we have religious and charitable organizations typically fall under section 501c3, and they can receive tax deductible donations, right? And not every section allows these deductions. For instance, social welfare and civic organizations registered under section 501c4 don't qualify. However, two types of 501c4 organizations, veterans organizations with 90% war vet membership and volunteer fire departments, do qualify for charitable deductions. So basically, because the IRS allows deductible donations to some entities that aren't registered as 501c3, donors can get confused. For example, let me give you an example. Taxpayers often have the mistaken belief that civic, right, and employee associations, such as certain retired worker associations and sports groups, qualify as charitable groups. They don't. So asking the organization about their qualification before making a contribution is recommended. Really, really recommended. And so that's number one. Number two. So number one, gifts to a non-qualified charity or nonprofits. Number two, expenses for housing students. So you may generally deduct any expenses incurred for housing a student affiliated with a qualified charitable organization. However, there are three scenarios where you cannot claim those expenses. First scenario, the student is not fully sponsored by the charitable organization. In other words, the doesn't pay tuition, food, healthcare. The student, number two, the student spends less than 25% of his or her time working for the charitable organization or on a project sponsored by the charitable organization. Scenario number three, you have hosted the student for less than 30 days during the last 12 months, along with other individuals in a private manner or in relation to an activity or activities that do not pertain to work the charitable organization normally does. In other words, you just need to make sure that when you host a student, if you want to qualify for the charitable, if you want your charitable contribution to be valid, you want the student to actually work on a project sponsored by a charitable organization, and you want the student not to work in a private manner. While you're hosting that student, the student must be working for the sponsoring charitable organization, and it has to be more than 30 days during the year, during the last 12 months. I want to talk about number 3, a promise to pay. So promise donations do not equate to taxable donations, tax deductible donations, right? So that pledge that you made doesn't become deductible until you actually give the money, right? People change their mind. You can't be like that. You can't be telling someone, hey, listen, I promise to send your cash. I promise to donate $1,000. And no, when you agree to contribute $1,000 or $10 or $100 per month during a fundraising drive, only the monthly payments you make during the tax year can be deducted on that year's return. So you cannot claim, say, $150 or $120 if you only paid, say, $40 or $50. Number 4, politics and charitable contributions don't mix. Very important. So joining the political process of our democracy through monetary support does not help reduce your taxable income via charitable donations. Right, and this is really much to the disappointment of patriotic donors, people who want to give to their party. I mean, but yeah, so those contributions don't count as a miscellaneous deductions either. Your tax bill would not be lowered after giving money to candidates or committees working on their behalf, advertising for a candidate or their political party, campaign fundraising events such as dinners and luncheons. Number 5. Ill-timed contributions. So it's very important to understand that timing does play a role for other cash and stock donations too. You cannot claim a deduction for a check with a future date that falls into the next tax year, even if you send it by the end of the year. So post-dated checks with January dates that are delivered December 31st do not count as a deduction for that tax year, for example. So you must use the current date and mail your check by December 31st. If you need the deduction, the charity must cash that check within this year. And so the day you instruct your broker to transfer a stock gift to your favorite charity is not the gift date. The day the transfer goes through actually determines the tax year for your donation. All right. And having said that, and this is very important to say, year-end credit and debit card donations can be claimed for the tax year in which they were given, regardless of when you pay your bill, because the key date here is the processing date. Very important. Number 6, charitable contribution. Number 6 that you cannot claim. Donated blood. Now, this is a very important one. We've heard a lot of news lately about blood donation and the tax consequence, the so-called positive tax consequences of that donation, but it's not. It doesn't happen. This is a myth, all right? You cannot deduct, according to the law, you cannot deduct the value of donated blood. So for those of us who donate occasionally for good works, rather than make a business out of it, the rules are standard. Your allowable deductions for charitable contributions include unreimbursed expenses incurred to do volunteer work. So it has to be unreimbursed. You can deduct those as long as the charitable organization has not reimbursed you. It's very important. You can't double dip. You can't win both ways, right? So if you are reimbursed, then you can't claim the donation. So no deduction though for donating blood except for any travel expenses to and from the blood bank for which you can claim. So I'm talking here like bus, train, or taxi charges. Or if you use your car, there is a standard mileage rate of 14 cents a mile plus tolls and parking charges. Now, how does the IRS justify this restriction? It's very easy. The agency says that you are performing non-deductible services. Very important. Services. You're not donating property. All right. Now, on the other hand, warns the IRS, your reportable income includes any payment that you receive for providing blood. So the IRS doesn't want you to deduct the blood that you donated, but you have to report as income any payment that you receive for providing blood. The bottom line here is that, to make things very simple to understand, if you donate blood, you can't deduct it. And if you use your car and you want to deduct transportation fees, and you want specifically, if you want to deduct the standard mileage rate of 14 cents, please keep your paperwork handy and sort it out, because the authorities are very, very, very strict when it comes to checking the validity of the claims. If you say that, what I'm trying to say here is that if you make the payment, if you, let's say you pay tolls or taxis, use your credit card or debit card, or keep a receipt in case you're audited. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are also having a conversation about the top 10 charitable contributions you think you can claim but actually can't. And the number 7, just for those who have just joined us. So number 1 was gifts to a non-qualified charity or nonprofit. Number 2, expenses for housing students. Number 3, a promise to pay. Number 4, politics and charitable contributions. Don't mix, I've already said that. Number 5, ill-time contributions. Number 6, donated blood. Number 7, donated professional services. So you cannot deduct the value of your donated time or professional services. All right. So this sort of goes back to what I said earlier about blood. So if you are performing non-deductible services, in other words, you're not donating property, you can't claim any deduction. So a charitable deduction is not allowed for services performed by a taxpayer on behalf of a charity or for a taxpayer's time expended doing charitable work. Consequently, a volunteer's charity work is a non-deductible contribution of personal services. However, and this is a big however here, a charitable deduction is available for unreimbursed expenses. I think I said it before, including automobile expenses the taxpayer incurs while rendering services to a charitable organization. So the thing you have to understand here is that a taxpayer who directs that compensation for services rendered be paid directly to a charitable organization is allowed a charitable deduction for the gift. However, the amount must also be included in the taxpayer's gross income, so the taxpayer cannot assign his or her compensation to another. And the thing here is that although the income and deduction amounts are the same, guess what? The income increases adjusted gross income, the AGI, which could affect other deductions and credits claimed ultimately by the taxpayer. So the thing we have to understand here is that whether a contribution is characterized as services or property is often subject to IRS interpretation. Let me give you an example. Charitable contributions of newspaper advertising space and radio broadcast time were not deductible because they involved a contribution of services by the donor. And this was ruled back in the days and by the Supreme Court. Conversely, the charitable contribution by a radio station of third-party lodging and airfare it received in exchange for radio advertising time and including income was deductible as a property contribution. See? So the property contribution was in the form of a contract rights to receive purchased services. Now I want to talk to you about number 8, gifts that are not gifts. This is an important one. So tax preparers frequently find themselves presenting bad news to clients seeking charitable deductions for things like bingo games, raffle tickets, or lottery-based drawings used by organizations to raise money. So unfortunately here, fundraising tickets are not deductible. And another misconception relates to community drives, right? You know, those community drives, we all love them. That's great. I mean, those are aimed at helping an individual or family with medical costs, loss of a house from fire, or funeral expenses. Make sure that the cause is sponsored by a 501c3 organization such as the Salvation Army or a Red Cross, so your financial assistance meets the deductibility test. Very important. And number 9, gifts that benefits you. Right? So this is a good one. So the gifts that benefits you are not deductible. So the time factor of gift eligibility isn't the only misconception taxpayers have. So by IRS definition, charitable contributions represent gifts given without reciprocity. So supporting a charitable organization by buying merchandise or attending an event puts you in the got something in return category, right? So because the price you pay for food, wrapping paper, or magazines sold in fundraisers cannot be fully deducted. Only the difference between your purchase price and fair market value qualifies. This is an important one. Let me give you an example. If you pay $10 or $15 for a roll of wrapping paper from a school group that carries, say, a $7 or $8 price tag in retail, then you have 2 or 7 tax deduction, right? In other words, you have 15 minus 8 or 10 minus 8. So likewise, buying a $50 ticket to a charitable event that includes a meal translates into a $20 deduction after subtracting the $30 you would have paid for that meal in a restaurant. Number 10, the IRS does not actually denies this undocumented charitable donations. So at the end of the year, when you remember those dollar bill you gave here and there to local charities and churches, you may be surprised to learn that you can't take a deduction because you have no proof, you have no receipts. The IRS requires proof of all cash donations, big or small, doesn't matter, such as a canceled check or a statement or receipt from the receiving organization. So if you make a donation of more than $250 in any one day to any one organization, your canceled check is not enough. You will need an acknowledgement letter dated prior to you filing your tax return for the year in which you made the donation. So non-cash donations like a vehicle also need supporting records. So for individual non-cash gifts of $250 to $500, that proof must include written confirmation. Very important. And for a non-cash gift between $500 and $5,000, on top of written acknowledgement from the benefiting organization, you need to document your ownership and cost and file Form 8283. And a gift of non-cash property valued at more than $5,000 demand additional substantiation. All right, folks, this was it for today's conversation. This was a short one. We wanted to just quickly remind you of the top 10 charitable contributions you think you can claim, but actually can't. So number one, we have if you make gifts to a non-qualified charity or nonprofits. Number two, expenses for housing students. Number three, a promise to pay. Number four, politics and charitable contributions. Number five, ill-time contributions. Number six, donated blood. Number seven, donating professional services. Number eight, the gift that's not really a gift, Number nine, gifts that benefit you. And number 10, undocumented charitable contributions. I'll see you next time, but until then, remember, stay marvelous.